All right, lads. Let's have a quick look at WAM yesterday's FOMC. I think debriefing FOMC is one of the most important things that I've been doing over the last 5 or 6 years of my trading. I've uncovered little nuggets of wisdom that I can then use to trade a little bit more successfully going forward. Yesterday was one of those days where it pretty much worked out for me. But I also missed out on another trade, which is a setup that I love off FOMC. And I'm going to go look at those trades, but also we're going to have a look at what was the market like going into the FOMC, what we're expecting, and how could we trade it. Okay, so what was really interesting about yesterday's FOMC was the fact that there was this very balanced profile. We've been very, very whippy, up and downy off news into the FOMC, and that was a lot to do with tariffs. But the key thing that we were kind of looking out for was whether or not we could hold a gap that was formed from last week's double distribution, and the gap was around 56.07, 56.18, and there was a weekly VWAP that was just below it at 55.95, just below it, and also we had a composite high volume node that I highlighted yesterday's video. That was all very, very important. So basically, these LVNs, they like to be, they're areas where we haven't done too much auctioning in the past. Prices really haven't traded there very much, and so your gamble is that you would, look for price to be rejected there once again, and that's pretty much what happened. But just going into the Fed, we have this really interesting comment again from Trump. We know they're starting to talk now. Besant is going to be meeting up with the Chinese this weekend. But basically, Trump said the 145% tariff sticks. And I think that was basically one of the big drivers of the move off FOMC, because the FOMC statement didn't really say anything. It's worth having a look at that statement and just seeing, was there anything that the Fed said that would drive this market lower? No, it was pretty much unchy. Didn't really, neither did Powell say anything into that. So I think what was happening was that there was this, the Trump comment that came out before. The market started to sell off just a little bit, started to trickle down into the FOMC. But then, basically, when the Fed didn't say anything to counter that, the participants started to take action on those comments from Trump. And I think that's what basically led us to then go and fill the gap that we had at 56.75 that we failed to get to close the day before. And then we dropped down to 55.95. We're going to have a look at that as well. So I think yesterday was difficult because we had obviously the Fed but that was contested with a lot of comments coming out from Trump, but also later on in the session there was another headline coming out from the administration regarding chips. And I think this is basically it was a very, very messy session because of this. So let's go and have a look into let's go and have a look at the details. I've got some slides of before we do that, you might want to pause, go and have a look at some of my tweets. This was yesterday's prep. Go and have a look at it because it really makes a difference in understanding what went on yesterday. All I was talking about this week was balance from the weekend's prep into yesterday's FOMC. All I was talking about was balance and this gap that needed to be filled and the VWAP below it. That's all I've been talking about. And I also warned that if there was a break, be cautious of the failure. And that's what was to happen yesterday. So if you get a chance, pause this video, go and have a look at that prep. I do it for your own good as well as mine. But might help you. Okay, so this is just a quick look about, this is the bigger picture, what had been happening. This was the double distribution from the last week. There's the gap there. I'm pointing to it right now. And there's the blue line, the VWAP, that I had been talking about so much. And you just see it came in, touched down to the tick, and then reversed. And then you got some, if you managed to get that trade there, and if you didn't, if you decided to hold it, which I didn't, because when I'm trading balance, I like to get out into the middle. So it was a good trade, good for, good 35, 40 points back up into the mid. But then you had this spike up even high into 75s in M period, which basically was a comment from the Fed. But yes, I don't like to, my rules are when you're trading balance, you get in at the extremes and then you get out in the middle somewhere. Okay, so, but you can see here, I just want to highlight the fact this was the plan. If you looked at that prep, you'll understand. We had this dip down into it, and then we rejected, sellers got stuck, buyers took back control, and then we had a bit of short covering that then led us to a move back up into the middle of the park, which happened to be around 56.42. You can see in the 5-minute candles that we are going to look at in a minute how important that 42 area was, and you can just see that it was last week's value area high, this this big cave here that's getting filled in right now during this week's activity. You can see this week's profile sits pretty nicely into last week's gap, this cave here, and that is just a nice typical pattern that we look for when we're looking at profiles. But we can also see that value has migrated high. It has done for the last few weeks. So buyers are active and they are looking to defend this gap, and that's what we got. All right, so that's the bigger picture. Basically, our plan worked out. Woohoo, great. Let's have a look at some more details. Let's have a look at the profiles individually on the week, just see the rotations. Whoops, I've gone back. I need to go back. Yeah, there we go. All right, so this is the balance that we had. I've highlighted the gap here, and this little white line here just denotes where that VWAP was. And you can just see, look, it's right on the edge of this balance that we had. We had this Friday high that we'd basically been sold off into on, since Friday we've been selling in, finding sellers. But we've also been finding buyers in this blue ribbon here, which is basically that gap that we'll be looking at. And we can just see like there was a couple of attempts to take it, but then we had really sharp reversals. The market's not really spending too much time in the middle. It's just literally ripping from one side to the other. Extreme balance, extreme rotations, but understanding the context that we're trading into FOMC and the other things that are going on around us really, really helps. So I think it's really obvious the balance, and you need to trade accordingly. Okay, breakout trades, much nicer to look for the break, maybe a retest, and then you get some confirmation as opposed to just chasing into those lows. The nice liquidation break trade, if you wanted to take it, was off the FOMC into and through the 20s. You'll have a look at that on the 5-minute chart in a minute. But basically, we going into the session, we had a lot of balance, and you need to trade accordingly. Into the Fed, again, it was just very, very tight, choppy block. I think the highs was 56, lows was 20s, and we were just rotating aggressively. You can see here up until this point here where we had the release down on the FOMC minutes. Not FOMC minutes, FOMC release. And then we had this move back down through the range, through the bottom of the range, took out the gap, closed the gap. Finally, this drew in some more sellers, some liquidations, and then we found the bid at this prior week's VWAP. Just making sure that my mic's working. It is good. Okay, all right, so have a look at these notes on the right hand side. I think it's important. I'll put them out on Twitter as well for you guys to have a look at. But let's have a look at the nitty gritty. These are the little 5-minute charts before we have a look at some footprints. We're going to have a look at that high there. That is a trade that I looked to take on FOMC. I didn't take it. And I will explain why when we look at the footprints. And nothing to do with the price action. Price action was perfect. It was more to do with correlations. Seeing bonds bid initially off the FOMC made me very nervous about taking shorts into a spike. But yes, maybe I should have, could have, would have. But those are my rules, and I didn't want to take that short. But let's just basically go through it here. Number one was this FOMC spike. This was the spike off the FOMC release. You can see this is the preceding balance that we're trading going into the FOMC. Up, down, very choppy. So this was the spike off the FOMC release number one. It just trades up into the IB mid, okay, and it fails. And also significantly, this this prior little chunk of orders here, it holds. So it trades up into that and holds as we trade lower. Now remember, what was this 42 as well? This 42 was the weekly point of control. So it was basically acting as resistance. This in this case popped up into the 41s, and then we had this really sharp, aggressive drop. These are 5-minute bars, so you've got like in 10 minutes we're taking out those 20s, the low, the pre-FOMC low, and then we got this liquidation. That was a trade you could have taken. It's aggressive, but seeing volume going in and the likelihood that we get some stops through here, that's a possible trade. I don't like to take those trades, but others do. Momentum trades, that was a possible short-term momentum trade, but then it trades into this area that we were talking about. It takes and closes the gap at 06 3/4, but then we find the bid, and we're going to have to look at the footprint here just to see how difficult it was to take that trade. And you can see here it stabs down into those 95s initially, comes back, but you see it tapering each time here. These little 5-minute candles, you've got slightly, well, this one here we've got slightly higher lows, and that ultimately those 95s hold. And that was the opportunity to just go long. I was in that trade, and I was telling one of my colleagues how uncomfortable I was feeling about holding this trade, but I just had to have faith that this trade was going to work. And just seeing how it was, Delta started to eventually turn, and I was vindicated. But it was not an easy hold, especially when you've got this break. But this is the last bastion of hope for buyers, the 95s. We speaking about that in our prep. The last bastion of hope, and I managed to hope the market all the way back up again, and that's what happened. And it just comes back up into number 3 here, and it just falls short of that prior high. Again, we got a slightly lower high, but only marginally. Basically, this full session VWAP is holding really nicely, and seeing that, that's a good chance for you to get the hell out of your trade. Okay, and that's basically why I don't like to hold my trades, because if I hold my trades from down here all the way up to 40, but only to see it come back into 10 on number 4, this is the prior gap, the blue ribbon again, that's a very uncomfortable way to trade. I don't like to do that. So all you guys out there who are buying the lows and seeing it rip back 30-40 points, no thanks. 30-40 points is a week's wages for some people, and I will take that every day. Anyway, you also got a chance to get back in again into the blue ribbon. This gap now starting to act as a bit of a, a liquidity, vacuum. Basically, buyers coming into here, sellers coming into here, but then it's quickly being pushed away, not spending very much time there, and we left this LVN there. We did a lot of volume at the bottom. We've got this little bulbous high volume node at the bottom. Then every time it was coming back into this area, we were leaving a nice LVN. Basically, market did not really want to trade lower, and buyers were being found up there, down there, so for us to go higher. And you can see it rotates back up into the POC, but then only to come back all the way back down again to this blue ribbon, which is where this is end period, final bit of the day, where we had some news about CHIP Act being rescinded, and we had this huge short covering. This is just nothing but shorts down here getting trapped, and very, very ugly for anyone getting trapped into these positions, because you could be justified in taking shorts up here and maybe even adding down here, seeing this little bulb here of liquidity, this little liquidity block. You could be taking shorts down here, and before you know it, you've got these huge reversals off news. So very, very, very difficult to trade this environment. Very choppy, no momentum, only short-term momentum, huge swings, very rotational. But it's important to recognize that we're trading into this, we're trading in balance. Condense last week's profiles, this last week's profiles into one. Have a look at the profiles, and you see that most of the activity was trading above 2025, which was the value area high of the week. There it is there. So basically we're coming to this area, but we were spending very little time below the value area low of the week, which is basically this attempt this little attempt here as this gap holds after getting filled. So have a look at all these. You know, it's really, really important to note, where did the market stop? Where should I be taking trades? Should I be taking trades in the middle? No, I want to be trading and waiting for my key MGIs, key references to trade. Okay, do not trade in the middle. You'll get fucked. Okay, so this is basically the crux of trading. Just don't trade in the middle. Okay, don't go chasing momentum. Don't go chasing extremes. Just wait. Obviously, there are times we want to chase momentum, but that's another story. Okay, next slide. Let's have a look at that. Which one's this one? Oh, this is the low. Okay, I've got this upside down. This is the low of the day, and you can see that delta going into the bottom. Really a lot of selling. Okay, but that was the opportunity there to get long if you didn't want to take that, you know, get long and hope trade that I took on the initial touch of 95. Why did I get into those get long and hope trades? Well, I'm not risking very much, and if I see a nice counter rotation on the ladder, if I start seeing some you know, seeing that kind of fraction, those little zeros on the ladder, I'll take a stab at it, and look, I can just job out very nicely and get back in again. And I think I did that a couple of times, but basically I like to get in quick, and I like to get out quick, and I like to get back in again quick, but basically being able to job this is a skill. But then eventually, look, you can see the delta starting to turn, and then we start to drive higher. This blue ribbon again is that gap. I said to my colleague that, you know, once we get back to above 06, sellers are in trouble, and that is, look, that's basically what happened. We started to hold 06, 07, and then this is the grind back up. So have a look at that. Tell me what you think. Hopefully these footprints help you recognize these patterns in future. This is just the initial spike off FOMC, and this is what I noticed. I didn't take this trade. Coulda, shoulda, woulda, into the full session VWAP, and you can see 207 lots lifted, didn't budge one tick higher, or just one tick higher. But then basically sellers really just ripped it down. Lots of selling delta going into that. But then this was like this blip up off the FOMC, held the full session VWAP, just ahead of the IB mid, and this is a setup that I would like to think that 9 times out of 10 I would take. This is one of the very few FOMCs where I didn't behave as I normally would, but that would have been a very nice trade for the short. But like I said, the bonds were climbing on that. Okay, okay, these are just some notes that I've done for pre-FOMC. Have a look at them. Basically, pre-FOMC was pretty balanced. We had this comment from Trump. This is just some context to the slides I've done for your review later on. FOMC, this was the aggressive trade down to the bottom. I'm going to flick through these. Short covering, end period, reversal on the CHIPS Act. Important. It's important to know how these rotations occur, right? I think it is anyway. I am a news trader at heart. Okay, key takeaways. You want to understand the market context and the environment that you're trading in. It's really important to understand that we were trading into balance and we had all this new stuff coming out. Right, patience is key. Stick to your MGIs. Stick to your key levels. Don't go chasing momentum, especially when we moved away from a key level. It's really, really hard. You're taking on a lot of risk. You're taking on a lot of price risk, and it's not the way I would recommend anyway. Chasing momentum is really, really risky. Okay, FOMC, it was a bit of a didn't do very much. Powell didn't say very much. The key thing was that he needs to be patient. I think that was important. Have a look and review what he said. I think it will help you. Also, going forward, highlight the extreme highs and lows of the FOMC. Okay, I think they're really important going forward. Okay, some of you might do an anchored VWAP, whatever it is. I don't do that stuff. But anyway, it's cool to keep some of those FOMC references going forward. Monitoring for continuation. As we broke below that 56.06, it was just really, really important to make sure that that momentum kept going. Where was the last bastion of hope? 55.95, and that's where bias turned up. So be prepared to get the hell out. Okay, once we start trading back above 06, you know sellers are in trouble. All right, just to kind of clarify that, the move through 06 was basically a lot of stops going through for the last couple of days where we attempted to take the 06-07 area, but then eventually stops got triggered down into 55.95. But the once we start getting above, there's trouble. Okay, rotations were really large and sudden. News, be very careful. And I think in this case, I think the market is really, it kind of ignored a lot of what the Fed was doing, and we were just trading whippy news. And that's basically my key takeaways for this Fed. I think that's it. Okay, I hope you found that entertaining, important. Trade of the day was the touch of 55.95, a level that I've been talking about all week. If you look at my videos, you'll know what I mean. Okay, that's it. Hopefully this is a bit more brushed up and polished. I'll put the slides up as well for you guys to review and have a look at.